Hi, and welcome back to the Strategic Targeting Podcast. Now, this is the show where we take a look at strategic considerations that people in our industry should be considering now. Now, a couple of years ago, remote online notarization and e-closing were absolutely strategic because during the COVID era, we just couldn't get business done otherwise. Now, a lot has changed since then, but not everything. And to speak to that, I've got two great guests on the show today. Aaron Davis, he's the CEO of AMD Enterprises, and Jonathan Kearns, he is the Vice President of Product at Mismo, and we're going to visit with both of them right after this. Gentlemen, thank you both for being with us today.
Thanks for having us.
Thanks, Rick.
All right, so let's frame this up for our audience now. The strategic consideration that we're talking about. Jonathan, open this discussion for us.
Yeah. So, when you're talking about remote online notarization and e-closings in the mortgage life cycle, why are they strategic? Listen, we all know that the consumers want it, but really what it comes down to is reducing your expenses from a lender's perspective, right? That's what we all want to do. We want to be able to reduce our closing costs and increase our margins. And electronic closings really allow us to do that. A lot of post-closing QC is expedited in that process, but also in the secondary market, the amount of how long that the loans sit on your warehouse lines and such like that, all of that is less time and thus saves you more money per loan. So from a strategic perspective, I think those are the two big things where from a lender's perspective, you would like to see it at an executive level is understanding, hey, it's great that it's going to have consumer benefits up front, your consumers want it, but really post-closing QC and in selling the note, the time it takes to sell the note is considerably less as well.
Got it. And Jonathan, I got to say, I'm really pleased to have you on this show talking about this issue. I don't know how the industry could even approach this without the hard work Mismo's done over the years to make sure we have those data standards. Now, Aaron, you've got people on the ground doing this. Are lenders understanding the strategic importance of this? And do you agree with everything Jonathan's just told us?
Yeah, no, I agree 100% with everything that Jonathan just said. And I know for a fact that lenders understand the importance, but quite frankly, it's just been a delivery of the mechanism because of all the moving parts and the different parties of closing. So you've got let's take this in a refinance world. It makes a whole lot of sense in a refinance world. This is a party refinancing existing loan. They understand the process. They've already, gone through the process of signing hundreds of papers. So they know that typically they're just looking to, obtain a better interest rate or cash out or finance someone off of an existing note. So, delivering a digital experience makes a whole lot more, a better consumer experience. That reduction of closing cost on the lender side, the title company side, and just making it more convenient to close at will for a borrower.
Absolutely. And I know every lender out there that was alive through COVID has seen some of these benefits, these strategic imperatives firsthand out there. But then COVID kind of disappeared and we kind of got back to normal and then volume fell off. Help me understand why this is so important now. Jonathan?
Yeah, I would say two things. With volumes down in the industry, we are looking more towards how do we cut costs. So we're already cutting headcount. And so now when volume goes up, if you don't implement these technologies, you're going to have to add that headcount back. So that's one thing that will do it. The second thing that we saw for COVID, it was a mechanism to survive and continue to close loans. But in the post-COVID world, what you're really seeing is if you make it part of your normal process, meaning it's not an exception process, that's where you realize the real benefit of digital mortgages. Anything that you implement as an exception process. So if you're only doing 5-10% of your closings that way, you're not going to gain all the benefits. And that's what a lot of the lenders saw in COVID, is they're saying, okay, hey, we're doing all of these now this way because we have to do it. Coming post COVID, all of a sudden I realized, hey, I only need 3 people in my QC department to do, 3,000 loans a month instead of 7 people in my post-closing QC a month. So if you're doing those if you make digital mortgage your default process, that's where you really start to realize all of the benefits and cost savings.
I love that. Aaron, would you agree with that?
Yeah, and I would say taking the mindset of it being an opt-out versus an opt-in. Too many, I'd say too many loans and too many applications we're still seeing as it's not being defaulted as an e-closing up front. Make it so that that's the norm and that's the standard. And then if you opt to not do it that way, then there will be delays, potentially more costs involved, and quite frankly, a worse closing experience. I mean, I can't tell you the thousands and thousands of e-closings that we perform now. It's such a more enjoyable closing experience for our borrowers to be able to just click through, as everything else in their world, everything's being done from an iPhone, and the convenience of home and being able to click and sign and move forward with your lives.
Yeah. It's interesting, when Aaron and I were talking more about this, and we've done a couple other sessions together, is, during that time post-COVID as well, if you recall, there were a lot of mortgage, or not mortgages, but house purchasing done without mortgages. And the majority of those, that's what was interesting to me, being on more the mortgage side when I went on the title side. The majority of those were being closed with remote online notarization and digital and e-closings. And it's a lot of the times when we get the mortgage process involved to where that adoption can go down a little bit. And primarily because there's a lot more different players in the ecosystem, right? You have to have your servicer on board. You have to have your warehouse provider on board. You have to have your aggregator, correspondent, and ultimate investor on board. But over the last 3 years, a lot of those entities are now playing in the ecosystem.
And I'll add to that too. It's almost from a lender's perspective, it's very difficult to have all these different workflows. It's almost like I want to go all in on digital closing, but there's only 42 states in the country that I'm allowed to do that in. I mean, here we are, 3 years post-COVID, or post inception of COVID, and California is just now passing their laws, the highest volume transaction state in the country, and we're just now getting the ability to perform remote online notarizations in California.
Yeah.
Wow. But so even with those hurdles, and it still, it's a complex thing to get all set up and done exactly right. Why do you think they should do it now? What are the risks if they don't? Aaron, why don't you start us with that?
Well, I'd say one of the risks if you don't is being left in the dust. I mean, so I think right now, everyone is focusing on process improvement. So the volume's not there. That the issue during COVID is that the volumes doubled if not tripled with these low rates and everyone moving around the country. So now all of a sudden that volume's been pulled back. Rates are twice as high as what they were prior. So focus on process improvement and make your experience and make your operations better.
Makes good sense. Jonathan, what do you see as the downside risk of not moving forward with this now?
Yeah, I think the biggest thing is, especially if you look at the MBA's, surveys out there on profitability, hasn't been great this year. The ones who are making money are utilizing digital mortgages as their default process, because it's saving them so much time in the post-closing aspect and selling it to the secondary market. So to make money right now, right? Margins are compressed. To make money, you need to be being as efficient as you can, and digital mortgage help play a huge role in that process.
Right. Well, what I love about this is that there were companies in our industry that were trying to get lenders to understand the benefits of e-closing long before COVID. COVID really gave us a jump start, and now we're to the point where people have got to either move forward or figure out why they don't. Talk to us now about the benefits of moving forward with e-closing with Ron right now and making it part of your normal process.
Yeah, besides the obvious and a better experience and lower costs and streamlines and QC, I'd say that one of the big things right now is fraud prevention. I mean, we are seeing record numbers of claims in the industry with absentee owners, pieces of property that aren't occupied by the owner, and that owner lives in another state or overseas, and the amount of fraudulent deeds being prepared and recorded in public record and transacted on. So you could own a piece of property right now in Florida, and all of a sudden it's sold without your knowledge, because a fake ID was obtained, a paper notarization process was used for a deed to be filed and then transacted upon. So if the entire world operated in the e-closing and the remote online notarization environment, the safeguards that Ron offers would literally eliminate the ability for this type of fraud to happen.
Wow, that's compelling. Jonathan, what do you tell lenders when you talk about the benefits of this?
Yeah. So other than the benefits we talked about saving money, cost cuttings, efficiencies, and things of that nature, I think the two other biggest things are compliance, right, and trust in data itself. Because if you think about it, on a paper closing, right, those documents can be changed at any given time. In a digital closing, those documents are typically created with a data set and are digitally signed. So you have the ability to trust that data and verify that data programmatically, so you understand your compliance and can trust your data quality better.
I love it. We've been visiting today with Aaron Davis and Jonathan Kearns. Jonathan, I'm sorry I messed up your name twice.
I wish that was Coors.
Gentlemen, I want to thank you both so much for being with us on the show today.
Yeah, thank you.
Thanks, Rick.